Morning, Steve in Chicago with the morning grain comments. Well, certainly is a lot of news overnight that is keeping the markets extremely volatile. Sometimes when you get this much news, the market reduces some of the trade volume and goes to the sideline until these issues are resolved. I think the first thing was the Fed more hawkish comments yesterday, talking about reducing stimulus and starting to raise rates as early as March. I think the stock market really has a challenge right now to try to look at and possibly rally if there's bad data. Good data, as far as the economy is concerned, certainly would move the stock market higher despite what the Fed is doing. Secondly, is that all the different rumors coming out about the Ukraine and Russia situation. One rumor about Europe coming up with some kind of agreement with Russia as far as solving the Ukraine situation. The U.S. sent a letter to Putin. No one knows what that letter said, but some people feel that one of the top issues is Ukraine is free to go into NATO, which is something Russia will not agree on. We also noted that in 2014, during the Sochi Olympics, Russia did not invade Crimea until the Olympics were over. So that might give us time until at least February 24th before any military action. Finally, we're having to deal with South American crop numbers. I think the most severe number is the entire South American soybean crop down 40 million tons and corn down 20 million tons. Even with the rains in Argentina and forecast some rains in central and northern Brazil, those numbers are still being passed around. Basically, looking at crop conditions and early harvest yields in Brazil. So, U.S. bean carryout right now is probably closer to 300 than 350 million bushels. The corn carryout is probably closer to 1,200 than USDA's 1,540. And so, really don't have a lot of wiggle room to pick up some of that lost production in new U.S. corn and soybean export sales. But certainly the trade's going to be watching for confirmation of this, and certainly could push prices higher. The fact that we're just a few cents below contract highs in both soybeans and soybean oil reflects a tighter situation here in the U.S. than maybe what the USDA is saying. We also note that corn prices continue to push higher, and that we're on the threshold of breaking out on the upside and higher prices led by the nearby market. We also note that there was some information put out yesterday about 2022 U.S. corn, soybean, and wheat and all crop acreage. Basically lower corn, higher beans, and higher wheat acres. And some people think we need more acres. So that puts the burden on December corn and also November beans to try to buy more acres. And then we have the U.S. weather pattern. And again, it's dry in the southern plains. That dryness should continue through February and maybe into March. And then we'll see if there's still a negative PDO influenced by La Nina, if that pattern of dryness shifts into the western corn belt later this summer. So I think the path of least resistance is higher. It's just we might be taking 2 steps forward, 1 step back in a market that has so much uncertainty.